All right, so crypto slash Bitcoin market update for today. All right, well, some definitely some interesting things are transpiring. For starters, this is the largest dollar gain 1D green candle that I've ever seen, I think, in the history of Bitcoin. Not percentage wise. We had a 40% candle percentage wise in 2013. Um, but as far as dollars concerned, this is a bigger candle. Someone posted an interesting chart in the room, which I can agree with. Basically, saying the mother of bull flags, right? Boom. So now, just a recap on what I've been talking about in the room the past few days, and what I've been tweeting to warn people. It's a couple things. It really helps to kind of pay attention to market psychology as well as technical analysis. So, again, um, I like to do all my heavy lifting in the gutter. No pain, no gain, right? That way, when I do all my heavy lifting in the gutter, I don't have to think about anything else. Everything else is cruise control, right? I don't have to think about, different resistance areas and different dip buying areas and different that and different this and then, right? So, yeah, it might be a little bit more painful for people to do all the heavy lifting down here when it's the scariest. But I'll tell you, in my experience, what's even more painful than that is missing the boat and then having to make tough decisions up here as to whether or not you want to buy Bitcoin or not, right? To me, that's way more of a painful experience than going YOLO and taking a chance down in the gutter. Now, a couple of interesting things with fib extensions here. Let me just also I want to continue on with the market psychology. I knew, and I was warning people about this, I knew everybody was, not everybody, but a lot of people were sitting on the sidelines waiting for the 2400 breakout. And I'll tell you basically what was happening. You had some dip buyers who bought down here who were taking profit. Some of them had targets at 2200. Some of them sold right at 24 to buy the dip lower. Some of them sold at 24 waiting for a bigger dip. They didn't get the bigger dip, so they had to buy in higher on the breakout. A bunch of people were sitting in cash and didn't buy anything, just waiting for the breakout. Some people were shorting this, thinking it was a dead cat bounce. Some people had limit stop orders up here. So basically, let me just show you something I tweeted. So this is what I tweeted. This is what happens when everyone sits on their hands waiting to catch the same damn breakout. Right? Look at that. They're all waiting for the doors to open, and then they rush, clamber over each other. You think everyone got a fill at 2400? How many people do you think actually got a fill and didn't get slippage? Not too many people. That's why the price shot up so high. And now we've still got people sitting on the sidelines in cash waiting to buy a dip. The problem is when there's too many people waiting to buy a dip, you might not get the dip everyone's waiting for. Right? I was giving people a play-by-play. Basically, several days ago on the 18th, basically it was Tuesday, waiting for all the 2400 breakout traders to join the party, essentially, right? Because I knew what was going to happen, right? So I would rather just get in early and trend ride and not have to think about all that stuff, because there's a lot of overthinking and all that kind of stuff that can go in, up at these levels. And if you didn't catch the breakout now, you'd be in a very, very tough situation. You either wait for a dip and buy a dip, maybe there'll be a throwback that retests prior resistance turn support, right? But, or you buy in at a resistance level, you risk buying a top, or too many people will wait for a dip and they don't get it and it keeps on going up and we get this like crazy mother of all breakouts V-bottom flying uppercut punch. So the best thing I like to do in moments like this is eat popcorn. Just sit back and eat popcorn. That's kind of what I like to do in these kind of moments. When I get in early and I feel convinced that I want to ride a bull trend, this is my attitude. Mega bull or bust, not chasing Mickey Mouse profits and overanalyzing. If bull trend fails, I burn with the ship. That is the resolve I put inside my mind when I feel that there's a high chance that we could do something crazy on a bull trend, right? Sometimes I would rather just burn with the ship and perhaps deal with some new dip buys down in the gutter than to, try to be too cute with the market, right? So I said, like, if you try to be too cute with the market, sometimes you'll lose your seat, right? You'll get kicked off the train, right? So everything's all about timing, right? There's a time to be cute with the market and play all the little moves and, get out and this and that. And then there's a time to sit back and cruise control, coast, right? And obviously, like, when you break out an all-time high like this is a time to not get cute with the market. This is a time to not try to pick tops or to get shaken out on throwbacks, right? Obviously, Bitcoin, when a bull trends, it can go up. It can go up, right? It can make a move. Also, miners start signaling for segregated witness. You got plus 80%. It might get locked in soon. Again, market psychology, right? Who's playing chicken? Who's bluffing? Right? The miners or the developers or the traders or the investors? Well, a lot of the traders and investors, they were all hedging, right? The developers, they're like, altruistic monks. They don't care, right? Up or down, they're in it for the long game. They just want to write code. A lot of the Bitcoin developers or volunteers, they're not in it to get rich, even though I'm sure some of them have boatloads of Bitcoin. It's the miners. It's the miners who have the most to lose, right? All of a sudden, all the miners who are against segregated witness are now signaling for segregated witness because of this user-activated soft fork. Who's going to lose the most money if the network splits in two? Who's going to lose out and bag hold on a bunch of mining equipment and not be able to make ROI on their monthly bills and expenses? You think as a trader and an investor, I have monthly bills and expenses? I can dump my bags. I can dump my bags and buy lower, right? It doesn't cost me anything to do that. So it's certainly not the traders and investors losing out. That would be bag holding the worst. It's the guys with warehouses full of, full of mining equipment and who have electricity bills and this and that. Now, I want to show you something interesting. Something to keep in mind if we continue on a mega bull here. And if we did a same measured like extension move as 2013, right? It broke the charts, right? It broke the charts, broke the fib extensions. That's a bubble, right? This is what a bubble looks like. A Bitcoin bubble. Now check this out. If, I'm not saying we're going to, but if we were to make the exact same measured moves, breaking the charts brings us up to the 5,000 mark, right? There's also confluence here, the 4,000 and up here. Now check this out. if we do a similar measured move on the recent run up, we have confluence at the $4,000 area, right? And if we broke the charts, it would actually hit my favorite sweet spot, extension sweet spot, which is 1.618 at $5,000, right? Why do I call that my fib extension sweet spot? Well, because Bitcoin tends to like that area, you know. Check that out. 1.618. Check that out. 1.618. So again, 1.618. Right? So time and time again, my point being is I've watched it hit those extension levels. Just like the 61.8% area, retracement area is my favorite area. Same goes with extensions. It's the golden ratio. 1.618 is the golden ratio. Anyways, so another thing with market psychology is a lot of people, there's probably a lot of new investors who really wanted to get their hands on Bitcoin, whether it be institutional investors, whether it just be new money sitting on the sidelines. I wouldn't be surprised if there's a lot of money just sitting on the sidelines waiting for the verdict on the scaling debate, not wanting to jump the gun and take a risk, right? And so I think that a lot of that money started to pull the trigger and jump into on the signaling, because all of a sudden we got the signaling, right? So I wouldn't be surprised if we just blasted over the next week or few days, if we just blasted past the all-time high, you know. There's a I was joking around. I was saying, you know, on Crypto Street, we call this the French curve flying uppercut. It's the new technical pattern, right? All right, so this is a beauty, right? This is an absolute beauty. And you'll notice even on the analysis the recap analysis that we did on our last video, last update, the one Chris and I did, I put at the bottom a little star and I said, riding this trend for a possible V bottom all-time high breakout. So far that's playing out. So let's see what happens, right? Obviously, we still got to entertain the bear side. So, you know, bear side is obviously if we hit resistance and we roll over and break down, then, you know, we'll have a big head and shoulders, right? I think that scenario is unlikely for several reasons. I think Bitcoin still has a lot more bubble left in it. Now, you know, it's possible it could hit resistance and have a throwback and retest prior resistance turn support, or it could say, nah, none of you are getting a dip. See ya. You know, like depends how many hungry fishies are in the market wanting to buy, right? But like I said, I saw too many hungry fishes wanting cheap orders, right? When I start seeing like a lot of new traders on Twitter, a lot of noobs wanting to buy a classic pattern. And listen, I had this on my charts too. Like I said, I had this and lower as original targets, but I adapted. I read the markets live and I adapted. I read market sentiment live and I adapted, right? When I start seeing people completely new to trading, and I had some talks with some of these people, and they're in cash, wanting to buy 1,300, 1,400. Well, I don't really, psychologically, I don't really want to be on the same side of the market as those people because they're often wrong. So I have to, like, when you think about Bitcoin, you got to sometimes think like a madman, right? You got to think of like, what would be the most absurd scenario to happen right now, right? What would be like the curveball to throw everybody off, right? Start thinking like that. And especially in very, very volatile moments. And so, you know, sometimes if you think like a wild card, you'll actually get pretty good at trading Bitcoin, right? You need structured technical analysis, but you need to be a little bit bold and wild too, right? While at the same time managing risk, of course. Something else that I showed yesterday, but I'm gonna repeat this. You know, for people who think that Bitcoin's in a bubble, right? This is a log scale, right? Logarithmic scale. It basically measures price action based on percentage gains, right? And just the reason why, look how far it deviated from the trend line. It hasn't even deviated that far from the trend line when you think about it. Check this out. Look at that, right? Whereas, you know, in 2013, I mean, the price gained, you know, over 7,000%, right? That was a bubble, right? 2 waves on a bubble, right? A bubble, in my opinion, has to deviate percentage-wise, Bitcoin, from the logarithmic trend line, right? Now, there is a possibility that if we didn't get the scaling, that we would have just touched down, and maybe we would have got that 13. That would have touched down perfectly on that 1,300 nose, right? So, you know, maybe we would have had that. But the thing is, when you get this classic like prior resistance turn support, you know, it took time to start to do that on the last bear trend. To me, it just seemed way too quick and simple that after like a couple of months, we'd all of a sudden snap our fingers, complete the bear trend, you know, retest prior resistance as support, and then, okay, quick bear trend, now back to bull, you know, like, that just seemed too soon for that whole cycle and process to happen, right? It seemed a lot too soon to me. So let's go back to the normal charts. Now, here's something else that I've been talking about. Here's something else I've been talking about. I basically said a lot of traders are kind of stuck in a habit right now. Let me show you Poloniex, right? And this is what I said. I said, if Bitcoin resolves its scaling issues, I wouldn't be surprised if it took its market dominance back, and if altcoins, major altcoins, had a dead cat bounce and Bitcoin took its market dominance back. Well, check this out, right? You know how everything was highly correlated to Bitcoin, right? And so everyone's assuming that all the altcoins, people are loading up on altcoins right now, and I'm heaviest in Bitcoin right now. Everybody's assuming on the same old habits that altcoins would suddenly become correlated, right? And then altcoins would bubble again. But guess what, folks? Altcoins already hit a bubble cycle, and the bubble cycle was fueled by all the fear, uncertainty, and doubt around Bitcoin. It had its lowest market dominance ever. Let me show you something. So here's the Bitcoin market dominance, the lowest it's ever been in history, right? Likely because of all the scaling FUD and the altcoin bubble. Well, what happens in the markets, right? I look at this like I look at any other chart. If you get something that's too exaggerated to the downside, what's it due for? It's due for mother of bounce place. So wouldn't it be interesting if we got a V bottom on Bitcoin's market dominance and if altcoins bled out the eyeballs, right? Because look at altcoins, they went parabolic. Check this out. This was all the altcoins without Bitcoin, right? Parabolic, right? Look where it was like at the beginning of the year. Look where it went. Parabolic bubble. So altcoins were in the bubble. Bitcoin gained in price, likely because people were buying altcoins. They needed Bitcoin to buy altcoins. So I think it was an altcoin bubble more than anything. And now I wouldn't be surprised for Bitcoin to now hit a bubble, a 1-2 punch, regain inverse correlation, and then have a V bottom bounce play on these charts. Bam. So, I mean, because last year we had inverse correlation on everything. So I'm not saying that that's going to be the case guaranteed, but what I am saying is it's already starting to happen. Look at Ethereum right now. Look at Litecoin right now. Look at Ethereum Classic right now. You know, this is not a time, in my opinion, for me to be loading up on altcoins. I'd rather just ride Bitcoin. I mean, you could pick, if you see some serious blood, you could pick off a couple markets here and there. But I think we could see a lot of people need to learn how to adapt with the markets, be fluid with the markets. I'm not saying I'm right. We'll only see after the fact. I think if we break the all-time high, that's will be the moment of truth for inverse correlation. If Bitcoin breaks the all-time high, if what I'm saying is true, then altcoins will bleed really, really hard. Right? And all the volume and liquidity will flow back into the king daddy of crypto. You know, back to Papa. Right? All the trading volume, all the excitement, all the action. Also, it doesn't help that every year Ethereum has a major hack. And we're not talking about like an exchange hack, okay? We're talking about serious smart contract hacks, because the code is very, very hard to protect security-wise. So check this out. Last year we had the DAO hack, and that pretty much killed the Ethereum bull trend. Yesterday, one of the major Ethereum nodes / wallets, their multi-signature wallets, got hacked. Multiple ICO funds were drained on about 3 or 4 ICOs, completely drained because of how buggy and how hard it is to secure a wide surface area for coding. You see, Ethereum's greatest strength is also its greatest weakness. Ethereum has prided itself and even taunted Bitcoin, calling Bitcoin the simple pocket calculator, and Ethereum is like a smartphone. Right? Well, last I checked, my pocket calculator has never been hacked before. I can't say the same for a smartphone, right? Wider surface area. Money, right? Money should be kept secure and simple, right? This is why Bitcoin remains dominant. Why Bitcoin is still the king of crypto. It's simple, it's secure, it's got roots that no other coin has. It has an altruistic, anonymous founder who renounced fame and fortune for a greater cause. It has a team of some of the best cryptographers and crypto blockchain developers in the entire industry working for free as volunteers, right? It was born out of chaos and altruism. No other altcoin can say the same. Most other altcoins, especially all the ones born out of ICOs, are born out of greed, with a handful of greedy whale founders who control the entire supply, and that makes those projects way more centralized. You know why Bitcoin had such a hard time scaling for 2 years? It's not a testament to its failures as a cryptocurrency. On the contrary, it's actually a testament to its strengths and decentralization. It means that even with, alleged centralized development and mining and this and that, it still had checks and balances, right? It took 2 years to get to this point, 2 years of infighting and power struggles to get to this point. Ethereum brags on having such, hey, we hard fork on the fly. Vitalik says jump and we say how high, right? That's not really decentralized, is it? Right? We don't even know what the inflation model is of Ethereum. We don't even know what the proof of stake model is with Ethereum. They're still figuring all this stuff out. So they've got a model which is move fast and break things, right? Which is the classic startup model. That model works great in a regular vanilla startup. The only problem with that model when you're dealing with money and multi-billion-dollar market caps and blockchain technology and hackers and security is we're starting to see that the move fast and break things model doesn't actually work very well in blockchains and crypto. In fact, it works horribly. People are losing millions of dollars hand over fist on Ethereum right now. Every year we have a major catastrophe because of the move fast and break things, fly by the seat of your pants type of coding strategy. And then people give Core flack for being cautious, judicious, rigorous in their testing, and extremely conservative with pushing out code. Right? We've seen other implementations like Bitcoin Unlimited with buggy nodes dropping off, crashing. Even SegWit 2x, this recent SegWit 2x, they still had to reach out. They wanted to fire core developers. They still had to reach out and ask core developers for their help to help them fix the code, right? Because this stuff's not easy. Anyways, so this is why for the past couple of years, Bitcoin has always been my number one go-to crypto as my store of value. And sure, it hasn't had the insane gains that some altcoins make. But, I'll trade those altcoins, but always with the goal of getting some more Bitcoin. Because ultimately, if I'm going to trust a significant portion of my portfolio in crypto wealth into something, I want something that's stamped, time-tested, and true. The honey badger of crypto, the blockchain that's been around for 8 years, that's had everything thrown at it, fire, blood, ice, the kitchen sink, the toilet, everything. Everything you can imagine thrown at this honey badger. And it still comes back. It takes its beatings and it comes back, right? That's why, just jokingly, that's why, I mean, this looks kind of rough for a profile picture, but that's why I chose Tyler Durden from Fight Club as a portfolio picture, right? It's symbolic. It's symbolic for being a trader and a survivor, right? If you're a trader, you're a survivor. If you fight in the trenches, if you buy when there's blood, you're buying when things are the messiest, the ugliest. You're taking your beatings. You know what they say? The time to buy is when there was blood in the street, even if it's your own blood. Well, guess what? I got a taste of my own blood. I jumped the gun too early at under 2,000, and the next day I was swimming in my own blood. And that's when you have to laugh at the chaos, right? And I came in the room and I gave people a pep talk and we laughed at the chaos. And I said, pay close attention to this market this moment, folks. Pay close attention to how you feel right now. If you're scared, right? If you're all this stuff, write it down in a journal. Learn from it, observe it, right? In those moments. So, and Bitcoin is the honey badger. Bitcoin is the thing that keeps on getting killed and beaten and keeps on coming back up, right? So, so here's the thing. So someone's asking me, is now a good time to get rid of altcoins? Well, let me just say something. I cleaned up my altcoin bags. I wouldn't say now is a good time, because I cleaned up all my altcoin bags systematically, gradually, on the dead cat bounce here. Bought the dip, hedged into, no, sorry, was it that dead cat bounce there? It was maybe this one of those dead cat bounces. It was this one. Sorry, it was on the 27th. Hedged into USD here, bought alts, and then went all in USD right here, right? This was a systematic cleanup of my altcoin bags. The only alt I did buy back on the dip on Golem after it washed out, I bought some back, half of my position on the dip. We shall see where that goes. I mean, if it looks like it's going to break down, I might cut out of it. I did buy a little bit of BAT in the gutter yesterday. We'll see though. We'll see. This is a mid cap. I'm not going too heavy on altcoins. I'm staying mostly Bitcoin. My portfolio is it's pretty much almost all Bitcoin. I've got some CFI as long-term investment. I've got some ETC as long-term investment. Bought some very small dips, like nothing huge, like 0.5% or whatever of some CFI and of some BAT. The reason why I bought BAT as a mid cap, a couple reasons. I think I might just buy it as an investment. I might just stash it as an investment. The reason being is because it broke out of the downward trend and has established a floor and is going sideways, which is generally a period of accumulation, right? And also the developer has a proven track record of not creating vaporware. He created Brave browser, Mozilla browser, JavaScript. So I don't mind having a little bit of this as a long-term investment. I'm not like loading the boat on this, right? This isn't a heavy play, right? But out of all the ICO shit coins I've seen, I wanna go with ones that seem to have a proven track record with a rockstar developer type of thing, right? So I'm going to keep some of this as an investment because the fundamentals are strong, and now I like the technicals now. I jumped the gun a little too soon, and I had to cut out on my position, took a small hit because I tried to, buy a dip instead of waiting for proper price discovery. But anytime I see a descend, a breakout from a descending trend line and some sideways accumulation, I don't overthink that. I see that pattern, I buy. It's that simple. I don't care. If it flops, it flops. It's not going to break the bank, hardly. Right? So sometimes you need to have strong resolve. You need to be adaptable and fluid, but you need to know when to juggle the markets, when to ride the trends and hold, when to cut, when to pull the trigger to get back in. I mean, this is all very... you got to be very fluid and shifty, right? All within the confines of technical analysis, also looking at the fundamentals, and looking at self-analysis and market sentiment. To me, self-analysis and market sentiment are two sides of the same coin, of the same analysis, right? I understand market sentiment and market psychology because I've done a lot of self-analysis. I've been there. I know how traders think. I know what traders do and what they're looking at and waiting for. So if I think the opposite of them and get in earlier, like I see everyone wanting to buy lower on Bitcoin, I buy immediately. I see everyone creating targets 2200, 2400, I'm going to let it ride. I see everybody sitting on the sidelines waiting for the 2400 breakout, I'm going to let it ride. And so on and so forth, right? Like, so you just got to kind of know how to read the herd and be a contrarian and swim against the herd, because like I said, the markets are an ocean of liquidity, right? And in the ocean, when bulls and bears go swimming in the ocean, they get eaten by sharks, right? Because sharks are adaptable. Sharks aren't attached to bull or bear. I'll never call myself a bull or bear, right? Why would I identify with a land animal when we're in an ocean, right? The oceans are chaotic, they're shifty, they're fluid, they're changing, right? You have to know how to roll with it, right? And not get stuck, psychologically stuck. It's like what I call paralysis by analysis. Like I said yesterday, there's the market's gone up like $1,000 and people are still paralyzed, like unable to pull the trigger, figuring out what to do. It's up $1,000 now. Now it's up too high. And then I know the market psychology. Then it gets up too high. And then they're in a damned if I don't, damned if I do scenario. It's like, if I buy now, I could buy the top. If I sit it out and wait for a dip, I could miss out. And you think you get paralyzed trying to buy a blood at the bottom. Imagine how paralyzed you'd be in that situation. I know what it's like to be in that situation. I've been in that situation before. That's how I've trained myself to learn not to get into those situations. Right? Do your heavy lifting in the gutter. Do your heavy lifting in the blood, in the trenches, so that you can relax and be light as a feather when you get the springboard. Poof. When you get the bounce play. It's market dynamics, right? It's also understanding physics, right? It's also understanding physics. People ask me, where can I buy your crystal ball? Well, it's not really a crystal ball, as it is understanding the nature of the markets. Look at this. Do you know why I was so bold and confident to buy blood? I felt pretty darn confident and good about this bounce play. You know why? Look at this. 1 day of blood, 2 days of blood, 3 days of blood with a massive red candle, 4 days of blood. Come on. Physics, folks. What did I say? Laws of motion. Inertia, momentum, counterforce. Right? So look. Check it out. Inertia. Right? It was getting a little choppy. Momentum. Blood, blood, bounce. Blood, 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 bounce. Blood, 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 blood. Right? Take out the pauses. What does that translate into? 1, 2, 3, 4, 5, 6, 7, 8, 9 days of sell-off. And 4 days of red is an anomaly for a sharp sell-off. For a bear grind, it's not an anomaly. You could get a bear grind that goes in a bear channel of multiple red days for months. Right? That's not what we were in. We weren't in a bear grind. A bear grind is like taking the rubber ball and rolling it off of your hands and letting it dribble onto the concrete. Little tiny dribble down until it stops bouncing, right? That's the bear grind. This is like taking the rubber ball, slamming it as hard as you can into the concrete and watching that thing fly in your face, right? Counterforce, market behavior, the laws of motion. You think the markets are exempt from natural law principles, right? Natural law forces, they're not exempt from that. Absolutely not. Right? So that's why I felt pretty confident. With so much sell-off, I was thinking to myself, I was greedy. I went all in. I went all in a little too early because I got a little too greedy. And then I pulled the trigger on the break of the bear channel, added on my margin, but added some margin. But here's the thing. I mean, I knew that after such a big sell-off, if and then looking at market psychology and all the people sitting in cash feeling bearish, looking at, you know, possible game theory and how miners would have the most to lose by not signaling for segregated witness and having a network split and all that kind of stuff. I just felt like we were going to get a very, very strong bounce play. Right? And we just blew past another resistance level. Right here. Right? And right here. And right here. Right? Yeah, so traditionally, so people are asking, you know, traditionally, like this is what'll happen in a nice, clean, perfect market. What'll happen is you'll get a throwback, right? See, there was like support resistance here that we had to break through, right? Prior support, turn resistance. We needed a throwback to retest that area, right? So, you know, in the perfect cookie cutter world, the market shoots up and we get a throwback to retest the breakout point, the prior resistance turn support. In the perfect cookie cutter world. In crypto land, what could possibly happen, because this is Bitcoin, is maybe all these, you see, I bet you there's still a bunch of people sitting in cash waiting to buy the dip. So just analyzing future market psychology. I'm not saying that the dip won't happen. You know, there's I'd say it's probably like 50-50, right? But when you have too many people who missed the breakout, like, you know, a lot of people didn't even catch this breakout and missed the bounce play and all that stuff, and you have too many people sitting on the sidelines in cash waiting for the breakout, well, sometimes what can happen, I'm not saying that this is guaranteed that this will happen, but sometimes what can happen is that, you know, they'll just watch the market pass them by, still waiting for that dip. And then we can set skeleton memes of the guy sitting on his bench, like still waiting for the dip, you know? I'm not saying that'll happen. But what I am saying is that I wouldn't be surprised if that did happen. It wouldn't surprise me at all. Because this is the dark comedy of the markets. Like I told you guys, the markets are a dark comedy. Expect it to do the unexpected and to kind of throw chaos at people. You know, so you gotta kind of trade this market like the Joker type of thing, right? Or here's another dark comedy. The other dark comedy is people, it starts to go up and people think, oh, there's not going to be that dip, and then all those people waiting for the dips finally rush in to buy, and then they buy the top, and then they panic and they add fuel, and then that's where you get the throwback. So either way, I think both those scenarios are pretty funny. I get a good chuckle. So who knows? Who knows what chaos which will ensue? Or maybe the market spit in my face and we get a head and shoulders. But whatever, right? Like YOLO. Whatever. That's all I have to say. YOLO. If that happens, I got a lot of wiggle room, right? Lot of wiggle room. So I'm not going to get scared out of my my position because I really I'm enjoying this ride too much. You know, I need to go buy a big jumbo bag of popcorn. All right. So, let us take a moment of silence for all our fallen warriors who shorted the bottom or who tried to get cute with the markets and shorted at resistance. All right. I'm going out to pour some beer out on my driveway soon. All right, folks. Well, let's look at some altcoins here, I guess. We'll look at King Daddy, Queen Daddy altcoin. I see Ethereum more as a queen. Looks like a big old head and shoulders on Ethereum. Nasty shakeout. I mean, for anyone who is trying to catch that breakout, nasty. Boom. Right? ETHUSD is probably going up because the Bitcoin price is pushing it up. So that would be the better pairing to play on a Bitcoin bull run. And I think, you know, maybe we'd end up with a dead cat bounce. You know, maybe, just maybe, I would entertain. Maybe I'd entertain a short up here above, you know, above like around 320 or something. Maybe in this zone. If we ever got up here, we could get like a lower high dead cat bounce. And the reason why I say that is because, I mean, this is madness, okay? This is a bubble, right? Bitcoin didn't do this in a few months. That's why I think Bitcoin still has some rocket fuel. Also, you know, this is called a relief rally, right? So like what I said, when you, when the rumor is FOMO, you sell the news. And when the rumor is FUD, fear, uncertainty, and doubt, you buy the news. And in this case, the rumor was FUD for Bitcoin, and the news is segregated witness getting activated. So it turns into what's called a relief rally, which is when market sentiment was very bearish due to fundamentals, and it turns out that those fundamentals didn't play out or weren't so bad, and then all of a sudden people get really bullish again, and that's a relief rally, right? People flip the switch, right? So obviously we could have a sell-off once segregated witness gets fully activated, but that might coincide with like a big push up, you know, maybe like a big parabolic move up, right? So I don't know. I'll keep my eyes on altcoins, but I'm not feeling them right now. You know, there's Poloniex doesn't look very hot to me. I mean, this could recover, and if it does, like, I'll entertain it. But to me, it looks like they're all regaining their inverse correlation, right? Which is kind of exciting. Like, hope that this is the case, folks. Just gun for this to be the case. If you really love crypto right now, then you should dance and rejoice at altcoins burning down to the ground into the dust, full retracements right into the dirt, while Bitcoin goes on a mega bull run. Do you know why? Because if Bitcoin goes parabolic and all of these sell off and go into the dirt, guess what happens? We get our inverse correlated crypto hedge back. You don't have to mess around with USD. You could take that Bitcoin, you could shovel it in a bunch of cheap altcoins. Bitcoin has a massive violent correction. Altcoins start to bounce and go crazy. Next thing you know, you've got even more Bitcoin, more money, right? So I would just love to have that inverse correlation back. I want altcoins to burn down to the ground. right? Except for, you know, a few mid caps, they're like not very liquid, but I would absolutely love for altcoins to crash hard. I want to see full retracements. I want to buy Zcash at $20. Right? Give me Ethereum for $50. You know, give me, you know, I want to buy all this back again for pennies on the dollar. Right? With my newfound Bitcoin wealth. If we continue on this trajectory, right? So I'm all for that. Now, of course, the market might not give me what I want. You know, the market might just decide to pump everything again. But remember market psychology, right? Let's go back again. Let me just, you know, you gotta really think about the market psychology here, folks. You can't just blindly base things on technical habits. And you know, altcoins ballooned and started to explode and rally right here on this Bitcoin sell-off. Ethereum, Dash led the charge. Ethereum followed. Then Ethereum Classic followed. Then, you know, then Ripple, then Litecoin. Then, you know, then they all start popping off. Boom, 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 like popcorn, one after another. Why was that happening, folks? People were bearish on Bitcoin. They were unsure. They were scared. They were very, very scared about the scaling drama. Right? Very scared. So people went flocking to altcoins, flocking to other crypto that wasn't having the drama. Then Bitcoin broke the all-time high, and instead of altcoins having their inverse correlation like they did all of 2016, Bitcoin was going higher and altcoins were going even higher. That's when I realized that the market psychology wasn't that people were bullish on Bitcoin. It was that people were bullish on altcoins and they were buying Bitcoin so that they can go buy some more altcoins. So in my opinion, Bitcoin hasn't even had, market sentiment wise, it hasn't even had its, its full bull run. Right? It hasn't reached its fullest potential, in my opinion. This would seem a little too short. A little too short for me. So, anyways, let's see how this plays out, right? Obviously, I'm just still talking in possibilities and probabilities. Even if I've nailed the past recent Bitcoin trades out of the park, you still always have to think in possibilities and probabilities. There's no absolutes. That's how you stay flexible and fluid in the waters. The instant you become, you start thinking in absolutes is the instant that you will be wrong and start losing money. And people are talking about the big drop on Bitcoin. Yeah, of course, it's pulling back, right? Like I said, it could retest. You know, it could have a throwback and retest that line, and it'll still be very bullish. And that's fine, and I'm still holding and riding it. I'm okay with that. So, it's healthy. You don't want too much up. But look, look how many dip buyers there are. Look how many hungry fishies. You know, you get a dip and all of a sudden, like, all these hungry fishies start jumping in. It's like minnows chasing blood in the water, right? Hungry, hungry, hungry. Finally, that dip I've been waiting for. Get it. Go get him. Hungry fishies. Piranhas. Anyways, so I'm having fun. Just have fun, guys. Don't take the game too seriously. Love the hustle. Enjoy the game. And that's it for today's market update. Cheers.